Hello crypto buddies, my name is Tom and I'm the crypto investor, and it's time for our weekly market roundup. We start with the heat map, and it's actually green. Can you believe it? We have a green week in crypto. Ethereum is up 5.5%, Bitcoin a bit more modest, still lagging behind Ethereum considerably, up 6.4%. Cardano with a nice week, 22% there, as with DOT up 24%. BNB as well, up 30% or so. In fact, let's quickly just jump into CoinMarketCap and see the top performing coins for the week from the top 100. So we're not including Rocket, which Elon Musk has sent up 200% today with his tweet of this emoji. Thank you, Elon. Anyway, so we have Theta Fuel up 69%, as well as Theta itself up 53%. They have had a storming week. Curve DAO up 65%. Kusama doing very well, up 56%. Solana as well, up 51%. So we are seeing some quite substantial moves from a few of these coins, but not really from the traditional big blue chips. So first I wanted to start by talking about the DEF cross. You may have seen Rect Capital talking about this DEF cross. So what that is when you have a moving average, so we have a 200-day moving average and the 50-day moving average, then if they cross, if the 50-day crosses over the 200, that is called a DEF cross, and statistically it can lead to substantial selling, or it can be a indicative of selling to come. And some people say that we may get a 50, 60, 70% drop after a DEF cross. So we have to pay attention. And it's looking like it's going to happen. You know, for the 50-day moving average to move up substantially, Bitcoin would really have to, start mooning aggressively. I can't, even if we recover and break 43,000 next week, it's probably not going to be enough to stop this from crossing. They may just kiss and support each other and head up, and that would be good news and really nice to see. But it's looking like we may get that, and it doesn't mean that we are, certainly in a perilous position. And you can see that, it's on the one-day chart that this is significant. You can see we've crossed many times. It's when it's happened in the bull market is what Rect Capital is referring to. So we have to have that on our radar. It's something for us to be fearful of. And it feels like right now, Bitcoin is driving the market down somewhat. I feel like, Ethereum has EIP 1559 coming out next month, and that, if Bitcoin was mooning, Ethereum would be flying, as well as many other coins as well. But it feels like, Bitcoin still is the coin that rules them all, and it is dragging the market down a little bit as it sits in these doldrums. Let's take away those moving averages. Let's have a look at all my messy lines. Here we go. All right, let's take this down. Well, we're in the daily chart here. So you can see that we still are in this kind of consolidation zone that we were in throughout January, and we've come back into it after our nice foray up here. And as I said before, you could say that these heightened prices were just simply to do with all of the excess leverage within the system. They weren't necessarily realistic. They were to do with, having excess leverage. And so once that all got flushed out of the system, here we stand. And, there's a lot of people sitting on the sidelines, unsure about jumping in. And of course, the classic thing that people aren't so interested on Bitcoin when it's 36,000. People want it when it's 55,000. People want that momentum, and they want it when the tabloids are talking about it. And so here we sit, and we are within this pennant. And if you didn't watch my other video, I think actually I have this here. Here we go. I can share it with you very quickly. So we're in what's called a bearish pennant. Let's jump back to this. So we have this flagpole down here and this kind of triangular formation that we can't seem to get out of. So we have Bitcoin. It's making higher highs, but it's also making higher lows. And so it's kind of coiling, and it's really getting to a point where it has to make a decision. Either way, we probably only have 2 or 3 days until Bitcoin will have to make a decisive move. And so I just want to share this with you very quickly. Here's an example of a bearish pennant. So you can see it's a very, very similar formation. But the good news, normally it would be a negative thing, but the good news is only a 55% conviction that that would be a negative formation. So really, it'd be a coin toss, and it doesn't necessarily mean we're going one way or the other. Let's just make it a bit clearer. So it looked like we were breaking out of it 2 days ago, but Elon had other ideas with his tweet about breaking up or something along those lines, and back down we went inside here, and we since found support on that lower line. But it's, excuse my French, it's shit or get off the pot time for Bitcoin here. So it's either going to break out and we're going to come and test 43,000, or we're going to have another test of 30,000. But I don't think we have boring mode for too much longer. So that is what we are paying attention to right now. Let's take a look at Ethereum. All right, so similar kind of pennant formation for Ethereum as well, really, and also we are at the end of that as well. Again, similar breakout. It looked like we were breaking out. Ethereum overall is maintaining more of a bullish structure than Bitcoin, continuing to hold in this upward channel here. So, and the best clarity we have of Ethereum having more bullish structure than Bitcoin is when we look at the comparison of the two. Let's take this onto the weekly chart, and you can see that Ethereum has had its second consecutive gain versus Bitcoin since the drop that we all endured. And if we measure that, you can see that Ethereum has had another 9.5% week better than Bitcoin. So that's the second consecutive one of those. As I said, there's a lot of excitement building with Ethereum right now with the EIP 159 release coming out next month. So looking a lot more bullish. And for me, when we get that EIP 159, that's when I think we are potentially going to see DeFi summer 2. So if you look at the DeFi index versus Ethereum, it was looking like we were breaking out of this downward pattern only to come back down. And we are, again, sitting at this floor, which has held as resistance for DeFi. So this is the DeFi pulse. This is the top DeFi projects versus Ethereum, just to clarify that for you. And I wouldn't be surprised if this holds and we work our way up. And if we do, then DeFi potentially has a 100% return that it can gain over Ethereum. So I wouldn't be surprised to see that happen over the next few months or so. And I also elaborated on one of my other videos why I'm so bullish on DeFi. This is something I came across that I really like, which is looking at the PE ratios, or price to sales in this case. But this gives us an idea of how much money these DeFi coins are making, and we can actually start to put a realistic value on these coins. So Ethereum is making $1 billion in revenue per month, and it's valued at $300 billion if you added all of the Ethereum together. So it gives us this PE ratio of 26, which is very low. A low PE ratio is good. It means good value. Tesla's 600. Ford Motor Cars is down at 15. So you can see that, Ethereum is, if you consider that it's such a growth currency, if you will, growth token, this is a very low PE ratio, and even lower, something like SushiSwap. SushiSwap has a PE ratio of 3.3, which is just bonkers cheap in my opinion. And all of them really are relatively cheap, apart from one guy, Bitcoin, with a PE ratio of 593, about the same as Tesla. So yeah, that's something that I've been looking into, and that gives me a lot of assurance that there is value to be found in the DeFi space. And if we look at the DPI index, this is the amount of money that is locked in DeFi. You can see that we've been steadily rising. Let's take this out into the yearly chart. Money locked in DeFi. DeFi's only been going really for 1 year now, and it will. And of course, that trend is upward until we had this crash. But $90 billion was locked in DeFi. We've since come back down now. We're at $65 billion, but working our way up, recovering, and we're going to eclipse 90 billion. I'm very, very sure of that. I'm sure we're going to see $1 trillion locked in DeFi within a decade. So it, for me, is the place that I am very excited about. All right, let's just quickly look at Bitcoin dominance. So you can see that this is another thing that tells me we're not necessarily at an end of cycle top. Bitcoin dominance would typically be rising if we were about to end the cycle. If you think of the difference between Bitcoin and Ethereum, for me, I like the analogy that Bitcoin is kind of like gold. It's a hedge against adversity. It's a protection of your assets against inflation. And Ethereum is more like, you know, holding a QQQ, the ETF for the Nasdaq. It's like betting on technology. It's like betting on civilization. And so, you know, if you thought the sky was falling in crypto, you would be hodling Bitcoin and moving towards Bitcoin. The general market sentiment, even though we aren't recovering at an aggressive rate, is to move more towards Ethereum than Bitcoin. I feel it's really this power shift between Bitcoin and Ethereum that is part of the issue right now. And the fact that Bitcoin is seeing a bit less love, that is really weighing on the total market overall. But you can see that, you know, we're almost coming down to these lows that we got to a second week. It's going to be interesting to see. I wouldn't be surprised to see Ethereum continuing to gather a bit more pace versus Bitcoin, and perhaps we come and test this low. So that is something else to keep your eyes on. Looking at the total market cap of all crypto, if my chart will be as kind to load. Please, chart. We're recording live. Be a good chart. All right, we're going to pause. All right, we're back. So this is the total market cap of crypto. We are sitting at $1.6 trillion. And then we did put the moon cycles on here, if anyone saw previously. But there's this unbelievable correlation between the moon cycles and peaks and troughs that we've seen in the market, which was very surprising to see. Anyway, they're on there for fun really right now. But we had it is a positive week. We have added another, what have we added? With another $96 billion of capital into the crypto markets. But again, we are seeing this sell-off, the same as last week. We saw this sell-off on Thursday. So we're kind of getting these hammers, which I really want to see taken out. Really nice to get back above this $1.8 trillion level. So, you know, just gives me a bit of uncertainty having these hammers. It's the same as on the Bitcoin chart. We are getting this kind of hammer formation as well. It just leave me a little uneasy. Let's just give ourselves an if in doubt zoom out, look at the Bitcoin logarithmic chart. So I'm just going to change this to a logarithmic view. And we're going to zoom out. And you can see that, you know, I've got these blue lines on here, which are the halving events. This just helps to give us that bit of clarity of where we are potentially in a bit of a broader cycle. So there's every chance really we're witnessing something similar to what we saw back in 2013. This kind of mid-cycle peak, a period of boring before another massive peak. What we saw here was, of course, like a curved top. We've never finished a cycle with a curved top like this. It's always been a parabolic blow-off top. It's always come and tested this upper trend line. Of course, you know, previous rules are there to be broken, but for me, this does not look like an end of cycle move for crypto. I want to finish with one other thing for you, which is looking at the DXY. If you're not familiar what the DXY is, it's not crypto, it's the US dollar index. So it's the US dollar weighted against the euro, the yen, the pound, basically a basket of currencies that tells us whether the US dollar is going up or down compared to other currencies. And you can see that, you know, this is a big old chart. We're looking back here at 2014. We're coming down to this point here where we held back in 2018 and the dollar, you know, it's weakening and it's looking a little bit vulnerable. We came down here, we rallied, we failed to get above 93.4. We've come back down, and if, it's a big if, but if the dollar does break this kind of very, very key level, we will probably, well, we will almost certainly, once we break it, see somewhat waterfall selling, a bit of a repricing of the dollar. And the next real support coming in would be at 84, which I believe is about a 5% move for the dollar. 5.7% move, which in currency terms is massive. And that would put huge tailwinds behind Bitcoin. It would really, really strengthen the rhetoric behind why we need sound money. And so, yeah, this is something which I'm paying attention to, and you should too. You can really see that this line is very critical. You know, we came and tested it in the financial crisis and didn't break it. We came and tested it in 2010. We only broke above it once the Fed got more hawkish and started to increase interest rates. And it's looking like, you know, we may well break it. So that's just something I wanted to share with you as well. All right, that's it for now. Happy investing. Let's hope we have another cracking green week. This is, of course, not financial advice. I am just a guy on the internet. If you're still with me now, thank you very much. Please do subscribe. Please do share it with your friends. Please do like it. We're at 420 subscribers. Nice one. All right. Happy investing. I'll speak soon. All the best.